What does the Chinese bear market mean for China's commitments in Africa's infrastructure spending? That's an important subject. Sven Richter, MD of Ren Asset Management, joins us now. Good evening to you, Sven. Answer the question. How important is it going to be?
Well, directly it has no impact. I mean, this is the market in China. It's an inevitable correction, as was discussed earlier. And the Chinese investment in Africa is not about individuals. It's about the government, and it's about parastatals and about big corporations. So directly nothing. The problem is if there is an overflow from what happens in the market now, and we don't really understand exactly what's going to happen in terms of that. You know, I read somewhere that we've been looking at loans that the banks have been making to companies based on the company's own shares. Okay.
Yeah.
And you know, and that's a potential problem, because what's going to happen to companies then? But then it also looks like it's only 1% of all loans to companies, so it's not really going to be a huge issue. So, you know, why is China in Africa? Why are other countries in Africa as well? It's a mixture of political, because they want to focus on building relationships, and it's also looking for resources. And that's driven really by the state, and it's driven really by sort of the big companies. So I don't think it'll have a huge effect in terms of it. But if China slows, there must be less money to invest elsewhere, obviously.
Right. So, Sven, two things. The first, of course, is that you've clarified that it shouldn't have a direct effect, but we've already been seeing some of the contagion, especially with the Japanese market. So some of those telltale signs of spillover are already being seen. So that being said, what are the key red flags that one would have to look for to say, if these red flags then become an eventuality and we begin to see them, then maybe there's going to be a direct effect, and now we should be paying attention?
Issues in the Chinese banks. You know, obviously a lot of what they've been doing has been margin lending, you know, and we've seen how this has affected companies, you know, in countries all the time. So that for us is a big issue if we see issues within the banks. And we don't yet know how bad they'll be. Remember that, you know, some people have made money still on this, because the market's up 150%, down 30%. Whether it's going to go down more, it probably will, because you close a market for a while. All it does is ratchet down to where it was going to be. You know, there's going to be it doesn't solve the problem in any way. So I think we have to watch very carefully the banks and then the corporates.
I'm not sure yet that the Chinese government understands the market. But
yeah, exactly.
Well, you know, many countries have not. You know, Hong Kong tried it in the financial crisis.
Right.
During the Asian crisis, Malaysia locked up all the foreign money and wouldn't let it out. So, you know, this is a normal thing. I think the one thing, though, is, if I remember correctly, it was Rockefeller who said many years ago, when your shoe shine boy is giving you stock tips, it's time to get out the market. And I think when the taxi drivers in China were buying, it was time to get out the market. So.
I think it was Joe Kennedy, actually. Actually, looking at this thing, it could have a longer-term positive view, I think, for Africa, especially because of the fact that investment venues in China are quite limited. And should they ever open up, I think, considering what's happened in the property market, what's happened in the infrastructure they've done there, what happened in the stock market, it's going to provide a huge incentive for money to flow out of China. And that could be reasons why places like, or companies like Alibaba actually listed overseas. Do you see that positive effect coming, you know, later down?
I think it will come later on, and I think it was going to come later on. Whether this slows it or not, I think if it was coming, and this is a major effect in China, it has to slow it a bit, because no matter how much you want to invest outside your country, if you don't have money in your pocket, you're not going to invest. Yeah. So, you know, if this is a relatively benign issue in China and there is money in the pocket, then people could look elsewhere. The challenge is that a lot of what we've seen in China has been driven by individuals going into the stock market. I read also that there were 4.5 million margin accounts opened in the last year or something like that. I mean, that's huge. If all those people want to buy shares in Africa, okay, there aren't enough shares to go around for that many Chinese. So it's,
another thing that occurs, we are so spoilt, I think, in South Africa with good reporting, good disclosure, governance and so on. The guys come down very heavily when there's bad governance or bad disclosure. Can we trust the Chinese numbers, both in the companies that report and the broader economic numbers?
I think that there are some sort of things that we have to look at very deeply, and we don't always understand them. But not just China. You know, look at Greece. I mean, a couple of governments over the last 10, 15 years in Greece have come out with, oh, sorry, the deficit wasn't 6, it was 12. We just didn't add it all up, type of thing, you know. Yeah. So, yes, I think you have those issues in China. There's no doubt China has been growing fast. I mean, just look at electricity supply and things like that. And I think it'll probably grow about 4% GDP, slower than it has. But for the second largest economy in the world to grow at 4% GDP, that's still not a bad growth rate.
And of course, we're speaking on the back of the BRICS summit also kicking off. We know that they got the new development bank. It's going to be domiciled in Shanghai. And one of the key functions of that bank is, of course, to ensure there's flows of funds into Africa's infrastructure projects. Are there any risks and vulnerabilities in this setup?
I don't think there's any risks in terms of the BRIC Bank, but I think the BRIC Bank will take longer to take off than we think. You know, we all see it and we see everyone making the promises and we see all the meetings, but the money has to be lodged, they have to look at projects, they have to lend to those projects, and those things don't take overnight. So I think it's going to be a while before we see the real meaningful benefits from the BRIC Bank.
Well, thanks to Sven Richter. He is MD at Ren Asset Management.